In this video, we're going to demonstrate how Forex Source subscribers made money trading a sentiment shift involving the Australian jobs report this week. Now, the move we're going to be looking at is this one here on the Australian dollar versus the US dollar. So let's break this down and see how you could have predicted and caught this move using our market commentary. Now, before we begin, don't forget to hit that button to subscribe or follow so that you'll always be notified every time that we release a new video. So firstly, we need to understand the context or the baseline surrounding this pair before the actual move took place. Now, if we just quickly jump to the Forex Source terminal, on the 19th of February, we can see that we released our Forex Source dominant currency sentiment theme, as well as our current sentiment drivers report for the Australian dollar. Now, in these reports, we saw that the Aussie dollar for that day was seeing some upside due to an overall positive risk tone in the market seen due to an improving outlook for the coronavirus. But we also knew that the strength was only temporary, as the market was still expecting the RBA to need to require further rate cuts somewhere in 2020 due to the domestic economy's outlook, as well as the external threats facing growth prospects. Now, once this baseline was in place, the next step was to identify the type of breaking news that would generate the biggest market moving shift. Now, for this, we can stick to the current sentiment drivers report, also in the 19th of Feb. Now, in this report, we can clearly see that we highlighted the next big event to watch for the Australian dollar was the upcoming jobs report the following day. The reason why this was such an important event was because employment data was a key factor for monetary policy, as the RBA believed that the unemployment rate would need to fall to around 4.5% to reach the central bank's inflation as well as consumption goals. Thus, the unemployment rate was in focus. So now all we needed was the actual trigger. In other words, the sentiment shift that we identified ahead of time to actually take place. So also in the terminal, going to the 20th of February, the very next morning, we can see that we had the release of the Australian jobs report. Now, even though the headline number came in better than expected, the unemployment rate actually ticked up, climbed more than expected to 5.3%. From a prior of 5.1%, thus moving in the wrong direction from the RBA's goals. Now, at the same time, the market also saw a little bit of a souring of the risk tone due to further fears of the coronavirus, which caused further weakness in the Australian dollar. So we had two reasons to short the Aussie dollar after the release of the jobs report. Now, quickly jumping back to the chart, we can see that we had that initial move to the downside, which you could have jumped in directly after the jobs report. However, after the event, we did have a small pullback on this 15-minute candle, and the pair didn't really go anywhere after that for about an hour's time, which meant that you have plenty of time to evaluate that this was a tradable opportunity to the downside and jump in on the chart and ride that move lower. Now, if you missed that first phase one move to the downside, that could have banked you about 30 pips. If you did miss that, you could have waited for a pullback back to that key 0.6650 level. Which was a psychological level to re-engage the pair to the downside, as the unemployment rate and risk of tone meant that the expectations for the Aussie dollar was to remain pressured throughout the session, running into the next session on the next day as well. So if you're interested in learning more about how our market commentary can help you interpret news and fundamental analysis and turn that into profitable trades like this, click the link below and check out Forex Source. We thank you in advance for watching. And please post your questions or comments below this video, because we do read all of them and actually base our future videos on what you guys ask for.